Good morning, ladies and gentlemen, and welcome back to Beat the Bell, presented by Kane Capital. The market is relatively flat after the PPI. Core PPI and PPI just came in. I got it right here for you guys. PPI comes in at 6.2%, beating expectations of 6.8%, while core PPI came in at 5.5%, beating expectations of 5.7%. So what happens next? To talk about it, we have a panel with us today, starting with Money Mander. Mander, how you doing?
Good morning. The big number you're missing is retail sales as well, which we'll cover in a second, but market's at a big spot here at the trendline resistance.
All right, excited to get into that. Diamond trades.
What's going on? Yeah, like Mander said, we had some data come out this morning. It's going to be really interesting. We'll break it down for you guys in just a little bit.
Diamond trades coming to you live off of the potato cam. Looking good, brother. Snipes.
What's up, guys? We got PPI today. Really excited. We're going to have some nice moves hopefully later, and we're going to catch a bag hopefully today.
Snipes, the new apartment looks sick, man. Can we go back to that, Ryan?
This
Beautiful. Sorry?
It's not my apartment.
Oh, well, wherever it is, it looks sick. You should have just taken the compliment.
All right, cool.
All right, Ramsey Rippers.
What's up, my man? Yeah, we're gonna have a good episode for you today. Snipe is actually 12 to 15 feet right behind me. So,
That's Mander and Ramsey's apartment. I should have known from all the TikTok videos. I'm surprised I don't have it memorized, and I've been there myself. So,
yep.
We'll compliment to you guys. It looks good.
We spoke a little. Mander touched on the trend line resistance. I'm excited to get into that. We'll touch on it later. We got a good episode for you guys. So let's get right into it. Let's do it.
All right, and Mo Mamba.
Good morning, guys. I'm actually excited to hear from Mander and Diamond about the PPI and the retail sales. So let's get it. You guys are an energetic bunch today.
All right, let's get right into it. So, Diamond, Mander, what do you guys got for us? Fed forecast and economic calendar for this week. Obviously, PPI and retail sales. Dive right into it.
Yeah, so let's start with the economic calendar first. Ryan, if you want to pull that up for us, we could take a broader look at what we've got going on this week. So mine is still loading. Give me 1 sec because I can pull it up on my end too. So this week, obviously, we had the key thing is going to be PPI and retail sales today. But even outside of that, yesterday we had the Empire State Index, the manufacturing index, which came out, and we'll talk about that a little bit. We have today's a pretty busy day. We have a Bostic speech at 9 o'clock, Bullard speech at 9:30. The NAHB housing market index comes out at 10. Fed Harker has a speech at 2, and the Fed beige book comes out at 2. So got tomorrow building permits, housing starts, and a Collins speech, and then on Friday 2 more Fed speakers and existing home sales at 10 o'clock. But into PPI and retail sales. So those numbers just came in at 8:30, as Mander mentioned. PPI came in month over minus 0.5%. Year over year, it looks like we have 5.5% versus 5.7 expected, or 6.2 versus 6.8 expected, rather. Core is 5.5% versus 5.7% expected. Retail sales month over month came down yet again to minus 1.1%. Versus that consensus of minus 0.8%. So both of those numbers came in light. And one of the things that Mander and I talked about last night is this could be seen as bullish for the market, right? You have the inputs for producer prices coming down, right? So that's always a good thing. Retail sales has cooled off, showing you that that demand has pulled back a little bit, and maybe that'll lead to a bit lower inflation. But I feel like people are forgetting the core of what that means, right? And so when you put it in context of some other information that we got this week, Ryan, if you want to throw up the Empire State, so that Empire State Manufacturing Index is basically just a gauge of how manufacturers are basically seeing ordering in and seeing business activity for manufacturing The index came in at like minus 32 versus minus 11 expected. So a massive miss there. That manufacturers are actually paying a little bit less than expected, anticipated. So you put all these things together and it sort of paints a picture of, okay, this economic slowdown is actually going to affect businesses, going forward, which is really, really interesting, man. Or what do you think on that front?
Yeah, I'm really curious to see how the markets kind of digest this data today, because I think everyone's of the consensus we're past peak inflation. It's really looking like this rounding bell curve. But as we look into the actual numbers, especially the Empire State Manufacturing Index you just showed, ISM when ISM came out, and then retail sales, we're really, really getting to this point where demand on the demand side of the economy is starting to shrink. And so whether that gets taken bullishly or bearishly will be interesting, because that obviously hints at the Fed accomplishing their job, getting towards this soft landing and the whole Fed pivot hope, right? If they're starting to bring down the demand as we're seeing, retail sales actually came in lower than expectations and almost double the decrease month over month from last month. Clearly, people are starting to demand and consume less. Now, the problem is, does that get looked at bullishly because the Fed's accomplishing their objective here? Or should we start to look at this bearishly as this is our first real hint into potential earnings, and companies are making clearly less money? If retail sales are down, revenues are going to be down. And so it's kind of this teeter-totter here where I get the idea of buying into the hope of the pivot, but at the fundamental level, what are you buying? You're buying companies for hopes of revenues. And so if revenues are clearly going down and retail sales are increasingly decreasing, revenues are going to be increasingly decreasing. At what point does the recession fear outweigh the Fed pivot hope?
Exactly. Yeah. It becomes like a give and take sort of situation. I think earnings that we're going to get coming up this week and next week, and even that first week in February when a lot of the big tech reports, I think is going to give us a good insight as to how much, that reduction in demand is actually weighing on these company profits.
Yes, that's going to be the big one to cover. We'll get through the earnings here for the rest of the week. So obviously we had Goldman Sachs and Morgan Stanley yesterday, which I'm going to cover in depth after this. But looking for the rest of the week, we have Discover and PNC as well, which are two names that are kind of tightly infold with that consumer credit area that I'm going to hit on with Goldman Sachs. That was a big miss. And then as we look towards the rest of the week, pretty much Procter & Gamble and Netflix, two of the other big players here. Besides that, it's a lot of smaller companies that likely won't move markets. But I wanted to cover Goldman Sachs in particular because we have been covering this consumer credit crisis multiple times on the show here. So as we look at Goldman Sachs earnings in particular, miss on revenues significantly, which marked a 16% decrease year over year and the fourth consecutive quarter with a double-digit negative year over year revenue. So they've actually had decreasing revenues year over year for a year straight now. And they came in with a $1.3 billion net income, which was minus 66% year over year. But where the big miss was on EPS. They actually missed on EPS by 40% compared to estimates and a 69% decrease year over year for their worst earnings quarter in a decade. So I looked into this. And so where were they really losing money? Like, how did it come in so off of expectations and so bad? They noted that they had to increase rainy day funds in response to existing credit card balances and future potential delinquencies, while they slowed down credit card originations and had to tighten underwriting because their partnership with the Apple Card and their dive into consumer credit led to a $1 billion loss. So that was very significant in and of itself. We've been talking about that. At what point does this increasing interest rates with the all-time highs of credit card debt, at what point does that start to get into delinquencies and firms actually losing money on issuing all that debt? We're starting to get there, but their biggest revenue loss actually came in their investment banking branch because M&A deals just simply dried up, right? If you look year over year, going back to Q4 of 21, companies were strapped with cash, interest rates were low. You had a ton of deals going on with mergers and acquisitions in their investment banking branch. As we look into last quarter, the total opposite is going to be happening. No one's IPOing right now in this economy, the stock market. Businesses are going to be less likely to buy other companies, right, and acquire others with interest rates so high. You don't have as much cash simply strapped on you. So that's really where they had their biggest loss was in their M&A. But I thought it was very pertinent to note the credit card and consumer debt branch that had significant losses on the quarter.
Yeah, man, and I've been touching on that credit card debt for like 2 or 3 months now, by the way. So just to point that out. That it definitely is going to matter, right? And I think we're starting to see that manifest itself. The market has had really a couple of shaky days as we've been reporting, through the bank earnings. And I think exactly like I said before, it's really going to, people are sort of trying to digest this information that's coming in, digest the data, digest the earnings, and really go from there. See, what that means for stocks, what that means for the market going forward. And I'm sure that we'll get some more clarity as February rolls around with the Fed meeting and some of these more large cap earnings. But that'll wrap it up for us on Fed Forecast, and we'll pass it back to Alejandro.
All right. And we'll also be getting some more clarity as we continue to watch the system, which is our next segment. So last week we got the buy signal. I think this was 6 straight trading days that we were trading above the 50 SMA on the 30-minute SPX chart. So above that 50 SMA, there was no real reason to go short. Hopefully that saved you from standing in front of a moving train. So this was like a 200-point rally from when we got this buy signal to the peak of this move. Now headed into today, obviously the market is trading slightly higher after the data release. What I'm looking for is strength at the open. If we continue to trade above this 50 SMA, I'm going to look for opportunities to go long. All right. Again, the only time that I'll be looking to go short is if we break down below the 50 SMA, we get the sell signal, which would be the bearish cross of the 10 SMA below the 50 SMA, but also watching the 1 hour SPX chart. So reminder, I always want the 2 charts to be telling the same story. So if we break below the 50 SMA on the 30-minute chart, a lot of times, and a mistake I see people making is they get super bearish and they're quick to jump into puts, short, whatever it is, without keeping in mind that there's still massive support from the 50 SMA on the hourly chart. So you kind of want to gauge where that is. Is there a strong risk reward if you play down to that level and then hope for the break? Or is it just too close? Is it not even worth it? So the reason, again, why the 1 hour chart is so important is because that's a really strong trend. And as you can see, we've been trending above the 50 SMA. So shorting it while trading above the 50 SMA on both charts would have gotten you in a ton of trouble. All right. So that is what I'm looking for going into today. Honestly, I was hoping that we would see a little bit more volatility here early in the trading day pre-market here. But again, the futures are only up 13. They're kind of bouncing around. So I'm going to go through, do some charting, take a look at some levels and analyze things before the open. And then we'll be ready to go based on that opening strength or weakness. All right, guys. But reminder, watching that 50 SMA on the 30-minute SPX chart. So that's it for the system. Now I'm going to pass it back to Ramsey Rippers. Ramsey Rippers, bet the bell. What do you got?
Let's go. Yo, great tan, by the way. Bring him
Thank
in.
you.
I didn't think that you could get any tanner. Holy shit, dude.
I look like
real?
No, it is real. So for the viewers that aren't aware, I spent a few days in Puerto Rico, and now I look like I'm part of the cast of the Jersey Shore. But I mean, you can't teach this. You can't teach this.
You literally look like
this is natural. This is all natural.
You look like SpongeBob and Patrick in that one episode where they're trying to get into the tan club. It's sick, dude. But,
anyway, I've never seen that, so I don't know if that's
an
insult or what.
Well, congrats on the tan. Anyways, we're going to go into bet the bell right now. So as Alejandro said, market was still opening a little bit flat here. We are bouncing in the pre-market off of that PPI and retail sales data. So with that being said, first question of the day, you guys know what it is, green or red today. Let's bring the panel in and let's start off with Alejandro. Muted.
I'm going to go green today.
Mander.
Tough one. I'll say slightly green as well.
Yeah, it's really going to be about clearing that 4,000 level on SPX and getting some confirmation through it, which we will talk about in the next question. Snipe, what do you got?
I have to go with green, and we're not going to get past that level, but we're going to get very close to it.
All righty. Diamond and Mo Mamba.
I will go red just to be different.
Just to be different.
Yeah.
Thank you. That's great. Mamba.
So I got red. I don't think we're gonna get through that trend line, that massive trend line on the daily time frame.
All righty. You
Right.
guys heard it here from the panel. All right. Second question of the day, a rather interesting one. So I want to know, if you had to choose one of these two sectors, which one would you put your money in for 2023? The tech or the energy sector? Tech was the weakest sector in 2022. Energy was the strongest one. Which one are you trusting in 2023 if you had to choose to put some money into it? Mander.
I'm going to take tech here only because I think at some point, me and Diamond's conviction here holds true on energy. So while I think energy probably has one of the least performing years, tech for the most part already got so beaten up last year. I think if I'm between the two, I'm just going to buy the lows on tech and see what happens.
Alejandro.
So last night we interviewed Markets and Mayhem, who shit on tech for about an hour straight. So I'm going to go with energy.
Right. I mean, I don't really, there's no wrong answer here. I think that I think that there's no right answer here. It is interesting though, because tech is massively beaten, but when you take a look at like the overall, major players in the sector, Apple's really only down 20. I don't even know if they're down 25% from all-time highs. Take a look at other names like Amazon, Microsoft, Meta, that have really gotten absolutely slaughtered in 2022. I feel like there's still a lot of room for Apple. We'll see what happens very soon with tech earnings coming out, Q1 tech earnings. But then again, at the same time, like the sector is beaten to shit last year. Energy's still about to break all-time highs again. It's and then you have the divergence between energy and the overall oil markets. I don't know. It's a tough one. Snipe.
I'm gonna have to go with energy, and I'm gonna sit on my big boy dividends and just collect them for years and years and years.
All right, the big boy dividends. Diamond.
If you're going from January 1st of 2023, I would take tech. But I think at this point, after the rally that they've had to start the year, I think that's about as much as they get. So at this point now, I would go energy. But I think if you're going from Jan 1, I would take tech. I mean, how many of those names are up like 30%?
Right.
Especially like the high beta basket to start the year already. So, yeah, if we're going like from today, I would go energy. From January 1st, I would go tech.
Okay. And Mo.
I'm going to take tech here to Mander and Diamond's point as well. I think tech definitely. I got to look at the bigger picture, right? If once tech gets going, it will outperform energy. So definitely tech.
Okay. Interesting. So we got kind of a mixed panel reviews here for that question. So Ryan, let's pull up the chart for our third question, which we're going to touch on that trend line resistance coming up on SPX and the S&P 500 SPY. So it's very interesting. We're in that little predicament again, where on the daily chart, SPX, we are testing that trend line resistance all the way from all-time highs. I think this is what, the 1, 2, 3, 4th. This might be the 5th or 6th test since we were trading at 4,800. We had a little bit of a break back in, what was that? I believe the early to mid-November. Turned out being a false breakout. We haven't been able to break this trend line, as I said, since the commencement, should I say, of this bear market. What do you guys think? Are we going to get some follow through this trend line finally and break? Now we're overlapping the 4,000 level as well on this trend line. So are we going to get some follow through, break through that 4,000, confirm to the upside, or is this just going to be another false breakout? And should I say, I'm not just going to consider a false breakout as like a one-day thing where we break over it and reject. Let's talk a little bit. Let's give it some time, as in a few weeks. Like when I say break through it, I mean like really, confirm through 4,000. We start seeing like, 40, 50, 4,100. What do you guys think? Mander?
I think we do. I'm going to take the rogue take that I think we do. I think we get a break and some follow through, because the second that cracks with some actual steam, I think bulls are going to jump in this, claim bottoms in again, blah, 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 get a rally above this trend line. The big thing here is, does this trend line actually matter? No, it's quite literally just a line drawn on a chart for us to realize. What matters is earnings and macro. And so I think this ultimately turns into the biggest bull trap of 2023 is people loading up long above this trend line break until the market starts to realize that the Fed's not lying on policy and earnings start coming in terribly.
Do you feel the same way about the 200 moving average?
Yeah, I think they're literally just They're moving lines on a chart that we use to visualize. But does this trend line break change our economy? No, it doesn't. So
basically what you're saying is the system is BS.
I was about to jump in here.
Go, get him, Hondo.
Careful with what you're saying there, Mander.
Take it over. Does the
Very
system's
careful.
not going to predict price movement for next year? The system's not like they're great terms. They're great tools in the short term.
Yeah, you're right.
Well, I have to say, does this trend line break change us from a receding economy to a growing economy? No. So like I think we do break. We see some follow through, and then it ultimately rolls over off a catalyst.
I was just messing with you. I think we're all in agreement here. Alejandro, what do you think?
Yeah, I think looking at the chart there, I counted 6 tests. I think this is the 6th time we're testing the trend line, so definitely expecting it to break. But yeah, we'll see.
Stock Sniper.
Yeah, based off of a systematic answer, the system seems to give me 3 different signals from what I study. It's got the buy signal, it's got the sell signal, and it's got the jerk off signal. And I feel like it's at the jerk off signal and when we're around this level. And yeah, so no, I don't think we're going to break this level.
Jesus, dude. We're going to need to add a 10-second lag like they do on live TV. So Ryan can I mean, what? The what?
Diamond, let's hear about it.
Oh, man.
I'm gonna go break, but it's gonna be a false breakout. It's not gonna hold. It'll break, and like Mander said, we'll get a little bit of steam, but I don't see it holding long term.
Mm-hmm. Mambo.
Oh, you guys are crazy, man. Pecker candle, jerk off. What? I don't know. What, I don't know what he just said. But one thing I'm shocked about, man. What's up with that, dude? You flipped from bear to bull now. You think we're gonna break through this trend line?
No.
Come on, brother. What's up? You're leaving me hanging now. What's up with that? This daily trend line?
Crazy rogue statement.
No, I think
Mander's positioning himself to not possibly be wrong. That's what's going on.
It's a very smart tactic.
Yeah. We will break through it, but we will, curl around eventually. Curl back around.
Oh,
eventually.
trust me, guys. I'm super bearish, but we're definitely gonna break through it.
Yeah. Yeah, but I do think, dude, I even forgot the question. Trendline resistance, break or reject. Man, I got to go with reject, man. To me, that's a massive trend line. You might take trend lines lightly. I don't. If I'm playing them on a shorter time frame and it breaks and holds that trend line, I'm riding it to the upside. So I don't think it'll break and hold. If it does break through and we see like a 2-point movement to the upside, don't forget it's a daily candle. Things can go south real quick in this market, and we've seen it happen in like 30 minutes. The market just dumps 2, 3, 4 points. It's happened before. So, I mean, I don't want to get faked out just yet. And also to Mander's point, he did make a great point, though. If we did break and hold, that doesn't mean, the overall economy is in good condition. That's it. No more inflation, et cetera, et cetera. No, we can still curl back around, but we'll go day by day, candle by candle, and we'll see how this plays out. But I am going to go with, I don't think we'll break and hold it.
Gotcha. Thank you, Mamba. And Mander, it's all fun and games. You're one of the smartest minds that any of us know. I'm excited to see how this plays out. I got a feeling we'll come back to this in a few months, and you'll be getting your revenge on everyone.
We'll see. We could reject off that thing today, and I look stupid by Friday.
I mean, well, you positioned yourself to be right, so technically,
yeah, I did.
All right, that's gonna do it for Bet the Bell. Back to Hondo.
All right, guys. So now we're going to go to Mo Mamba. Mo's got Mamba market analysis for us.
All right.
You good there,
you guys
Mo?
hear me? Yeah.
Yeah.
You guys, all right, cool. So we're gonna go into 2 things real quick. The daily analysis on SPY, what we just I'll just hit on right now. And then another thing is I want to get into one flow that on PayPal, right? And then also some analysis on PayPal. But real quick on SPY though, of course, this was the massive daily trend line everyone's talking about. Big thing is we did test it yesterday and hold. This is not set to the T, but we did test the trend line and we closed below. Another thing is we did close below the close of not yesterday, the day before. So this is a bearish outlook for me. This close right here, testing the trend line and closing below this candle right here is close on the day is a bearish outlook for me. I am expecting further downside. PPI is disappointing, I guess. I was expecting a bigger movement on that. Mainly, another thing is we touched on last week, guys, was the flow that was coming in. We didn't have BTB Monday, but the flow continued to come in this way. Started last Thursday and it continued to come in yesterday as well. Massive put flow coming in on the indices and across the board on large caps and other tickers. So, I mean, we did mention it. Do we break it, hold this? Who knows? We'll see what happens. But if we do come down and fall through, I do want to target 393. That was 393.3 to 5. That was an area where we were having trouble coming through, and then also to the upside when we were above the level holding as support. So I have this level as a target to the downside. If we're able to break through this 393 level, now we have our daily demand. What was once our daily supply. We'll look to get to test this daily demand on SPY. Now for PayPal, let's see, PayPal again, another trend line. This trend line is probably not lined up to the T, but big daily trend line here. It's testing. We also do have some resistance right here. There's a daily level up here. Nice little resistance. We got at 80 and some change. What is this? 80.6. Oh, this thing keeps jumping around. All right, 80 is some change. Let's just say it's 80 is some change. This is a magnet right here, but let's just do that. All right, so we have PayPal coming up testing this trend line, and then we have this nice key level. You see the resistance right here, this consolidation below that level. So that's key for me. See if we're able to test, close below. I like this to the downside, and then hop going into the flow. Let me see. Are you guys able to see the flow, Hondo?
No, not currently.
Okay, I think I need to
probably gonna have to share a different window there. Yep,
no.
There you go. Perfect.
Right there. Okay. So PayPal, we had on the last week some flow come in, and then we had flow this week for 0120, right? So and 2 days some put flow coming in. So that's leading me to think, are we gonna ever test that trend line now, right? Or if I did fix and line it up a bit, did we test it already and close below? And then that level is key for me. I want to see today if we're able to test that level again, 80, let's say 80.2, 80.3. If we're able to test that level again and close below, I like this to the downside. We'll even look at some further expiration to see how maybe a month out, February 17th looks like. So February 17th, not much. We just only have this one call flow, again, small compared to the other ones that are coming in. But we'll see how this plays out though on the daily time frame. Thanks, Hondo.
All right, awesome. Thank you, Mo. All right, we got a couple minutes here, guys. We're going to quickly go through today's top watches brought to you by TrendSpider. Reminder that all the charts that you saw during today's show and that you're about to see are TrendSpider charts. So if you are interested, you can use our affiliate link for 25% off. If you're watching on Twitter or Twitch, go ahead and screenshot. If you're watching on YouTube, you can head directly to the show notes, click the link, copy, paste the link, whatever you got to do, head over and get that discount. But let's get rolling here, starting with Diamond Trades.
Yes, top watch for me is going to be NVIDIA. When you look at the NVIDIA weekly chart, you can see a bit of form, which is a bottoming formation. The name is down substantially from all-time highs. I'm not really expecting a back to all-time highs. Obviously, the conditions are generally different. But this is a name that's trying to poke up over this like 175, 180 supply zone. I think if it can do that, it can move to 200 rather quickly. So this will be a top watch in the weeks coming, probably the next couple of weeks. This one will be on the upside watch for me.
You know, we weren't going to do a market moron, but this is now several times that Ryan puts the wrong ticker on the graphic. So today's market moron is going to be producer Ryan. What an idiot, dude. Focus up a little bit. All right. Media moron. There we go. All right. And then Money Mander.
To his defense, Tesla's looking pretty good to the upside as well as Nvidia. I like that. I'm actually watching Apple yet again. I'm back with this. This is a weekly chart on Apple, giving a break, hook, and go look off of that support turned resistance. We'll see if it flips to resistance. So with the markets here at this trend line that we spoke of, if the broader markets reject off of this trend line, as Mo's anticipating and several others, Apple is my favorite downside setup here. And what the heck is that? Monetter?
Oh my God, Ryan, take a lap, dude. Monetter. Jesus. All right, yeah, let's get that off the screen. Ryan, have a coffee or whatever you need to do to wake up. All right, guys, that's going to do it for this morning's episode of Beat the Bell. We hope that you guys enjoyed it, and we hope that the episode was valuable. For those that don't know, the 6 of us plus Coach Dipguard trading live in the Discord all day, every day. You can go to kane-capital.com to join, but that's going to do it. Let's have an awesome trading day, everybody. There we go, Kane-Cap. Beautiful. Let's have an awesome trading day, everybody. And we will see you back here on Friday morning at 8:30 a.m. Eastern time. Have a good one, everyone.